Welcome to PDAC 2023. My name is Julian DeRosier from the IIF. I'm joined today by Jason. Hi, Jason. How are you doing?
I'm excellent, Julian.
Good. So, Jason, maybe first of all, can you introduce yourself and the company you're representing today?
Sure. I am the CEO of Magna Mining. Magna is a Sudbury-focused nickel, copper, PGM exploration development company. We have two significant projects in Sudbury. And we are in the process of completing a PEA on one, and we have a feasibility study on the other.
Okay, and then, so Sudbury Nickel Project, is it a proven district? For everyone who would not know about it, who are your neighbors?
Yeah, so Sudbury is a very prolific mining district for nickel. Originally it was Inco and Falconbridge were the two major mining companies for the last 100 years, and more recently were acquired by Vale and Glencore, as well as KGHM, the Polish copper company, also have a presence. So yeah, our neighbors are some of the biggest mining companies out there.
This is obviously very reassuring, but then we need to talk about the two assets. Which one do you want to talk first about?
Sure, well, we can talk about Shakespeare, and that was our first acquisition of the company in 2017. Shakespeare is a past-producing open pit that has all the major permits for the construction of a 4,500 ton per day open pit mine, mill, and tailings storage facility. We completed a feasibility study on it in 2022, and we think it is the perfect asset for us to build our hub and spoke production model in Sudbury, and that's what we're out to do.
Well, this is great to hear. This is actually the project that's behind us. I can see you have resources on it. Is it high grade? Is it low grade? Can you tell us a little more about that?
Yeah, so we have, as per our feasibility study, we have a 11.8 million ton reserve of open pit reserves in 16.5 million tons of indicated open pit resource. The global resource on the project, including underground and inferred, is over 22 million tons. So it's a significant resource, polymetallic. The grades are good, but they're not as high grade as our Crane Hill project, which is very high grade, very exciting, and nearby.
Okay, and then just before we switch to that Crane Hill project, let's just finish first on the Shakespeare. So basically, you're already permitted. There was already previous infrastructure on it. So we're maybe looking at a lower capex. Can you maybe tell us a bit about what the feasibility number looked like? That's capex, IRR, net asset value, and so on.
Sure, and actually the picture behind you is a good overview of the project. So the Shakespeare mine, when it was in production, it was through toll milling. So the open pit ore was mined, crushed on site, then put in a truck and hauled to a nearby mill. And so it operated like that. About 500,000 tons was historically mined. So it does have excellent road infrastructure, an ore pad. It has it's in close proximity to hydroelectric power, so it's close to grid power. But there isn't a mill on it yet. The feasibility study that was done estimated the capital cost to build the mill, the open pit mine, and the tailings storage facility at 233 million Canadian, and that was last year. So a reasonable capex for a new 4,500 ton per day mine and mill.
Absolutely. So this is good economics for sure. And what was the NAV on the project?
The NAV pre-tax was about 210 million. Now that was using 850 nickel and lower copper prices. But really, the project, what makes a lot of sense is our strategy to combine both Shakespeare and the ability to have our own mill with other projects like Crane Hill, which are higher grade, can feed into it. So we never really expected to build it as a standalone project, but combining with other projects in Sudbury, like our Crane Hill we recently acquired, makes a lot of sense. And we're doing a PEA right now that will look at processing some of that ore through a future mill at Shakespeare.
Well, it seemed like a perfect timing to switch to the Crane Hill project and property. So basically, what is this one? Is this also open pit? Does it has previous mining? Is it greenfield exploration?
Yeah, so
give us a take on it.
Crane Hill is a historically past-producing mine that was owned by Inco. It operated for many decades and produced over 20 million tons of high-grade ore. It shut down in 2002. Since it shut down, Lonmin Canada drilled 90,000 meters of drilling on the property. We acquired it and closed that deal in November of 2022 and came out with a resource shortly after that of 31 million tons between open pit and underground. And just to kind of give a sense of that, so there was 16.8 million tons of open pit resource, indicated resource at a grade of just over 1% nickel equivalent, and an additional 14.5 million tons of indicated underground resource at a little over 2% nickel equivalent. So some very good grades, near surface. I like to say a lot of it is could be amenable to open pit mining. So a great resource, and when you combine that with the 16.5 million tons of indicated open pit resource at Shakespeare, now we really have, we believe, be a sizable project.
Well, this sounds pretty exciting, especially that you can obviously plan the development in stages with the first open pit, second open pit, then underground and so on, and not face massive capex up front of building an underground nickel mine, which would be difficult financially, obviously, to finance.
Absolutely. So our strategy right now is to look at a toll milling option for the Crane Hill project. Having high grade so close to surface and having 2 mills in Sudbury which have excess capacity for milling ore puts us in a great position. So we are in discussions with both of those companies, and we believe that we can start a very low capex operation through toll milling that could help fund the construction of Shakespeare. So our first step with that is looking at doing an advanced exploration bulk sample, and we're working on that currently to define what that'll look like. But we hope to be breaking rock in 12 months from now.
Well, this is pretty exciting. So for anyone who's an investor who would like to know more, so first off, we discuss obviously about the two projects, but basically a little more of what's happening behind the share structure, cash on hand. How does all that look like?
Yeah, so we're about 55% institutionally owned. Management and board own about 13% of the company. The remainder is retail. We have 2 great cornerstone shareholders, one in Dundee Corp, who's invested since our RTO in 2021, currently owns about 22% of the company. Jonathan Goodman, who runs that company, is on our board. And then with the acquisition of Lonmin, we raised $20 million. We closed that last fall, and we brought in a new shareholder in Hawks Point, who own about 12% of the company currently. We also closed a financing in January of $18 million with $15 million of charity flow-through for exploration, with an additional $3 million of hard dollars. So, currently we have more than enough cash to get us through this year and next year, and we have a large exploration budget planned, approximately 20,000 meters this year, and then we will be looking at some advanced exploration, towards the end of this year and start of next year. So we're in a good position cash-wise, good supportive shareholders that believe in our strategy, and now we're just continue executing it.
Well, Jason, this is all good news. Great to hear. I invite everyone who watched the video to actually go on their website, which is
magnamining.com.
Magnamining.com. You heard it directly from Jason. Go on their website, get on their newsletters. If you have any question, write them. Surely there's obviously a link to send an email or questions to you guys. And then I invite you to follow the story. So, Jason, thank you very much for your time, and best of luck for the next year.
Thank you.